A sloth, a donkey, and a curious human. Send a prompt and see what they're doing. One hits record with a question on his mind. Two brothers pick it up, see what they find. Corn takes his time, Herman's got the facts. Back and forth, they never hold back. My weird prompts, come on in, that's where we begin. My weird prompts, glad you're here.
This episode was generated using artificial intelligence. Please verify facts.
You know, Corn, this whole show runs on GPU compute, and we wouldn't be here without Modal.
Seriously. And that's what powers all our text-to-speech. Everything you're hearing right now.
They're an AI infrastructure platform. Developers use them to run GPU workloads in the cloud with zero infrastructure headaches.
If you're building anything with AI, check them out. Modal.com. Imagine walking into a high-stakes boardroom where the pitch isn't about quarterly dividends or market penetration, but about saving the world. You've got these suit and tie types talking about ending global poverty and reversing climate change, all while sliding a contract across the table that locks in a 20% management fee. It is a wild scene, really. With ESG assets projected to hit $53 trillion by the end of last year and into this one, the line between genuine social impact and what I can only describe as sophisticated reputation laundering has never been thinner.
It is a massive industry, Corn. We're talking about a fundamental shift in how capital is deployed, but the question is whether the capital is actually doing what it says on the tin. By the way, quick shout out to the tech behind us today. Google Gemini 3 Flash is writing our script for this episode. But back to the point, what we are seeing is the rise of what some critics call market world. It is this ecosystem where the global elite convince themselves that the only way to solve the problems created by the market is to have the winners of that same market lead the charge with more market-based solutions.
It sounds like a closed loop. And honestly, we got a prompt from Hannah this week that pushes this even further. She sent us a note asking us to look at how impact investing uses this veneer of respectability to basically run some of the most tried and tested moves from the cult playbook. She is suggesting it is an echo chamber of imagined virtue that really just serves to entrench the economic dominance of the wealthy. So, Herman Poppleberry, are we calling fund managers cult leaders now? Because that is a bold start to the morning.
Well, we have to be precise with the language. We aren't using cult as a slur or just hyperbole for something we don't like. We're looking at the structural analysis of high control groups. When you look at how these impact funds operate, you see the hallmarks: shared exclusive language, isolation from outside critics, and an absolute devotion to a specific ideology that can't be questioned. It is a mechanism that turns a financial product into a social identity. If you are an impact investor, you aren't just a guy with a portfolio, you are a savior.
Right. And if you question the Savior, you aren't just a skeptic, you are a heretic. That is the part that gets me. It is not just about the money, it is about the moral standing. Impact investing provides this social signaling mechanism that validates the investor's soul. It is like the modern version of buying indulgences from the church, but instead of a cathedral, you are funding a vertical farm that may or may not ever actually grow a head of lettuce.
But let's look at the vertical farm example for a second. Think about the messaging. The pitch isn't, we are going to sell kale to high-end grocers. The pitch is, we are disrupting the agricultural industrial complex to provide nutritional sovereignty to the masses. When you frame a business like that, you're not just selling shares, you're recruiting disciples. If the farm fails to produce a crop in year 3, the cult leader fund manager doesn't say we messed up the irrigation. They say the old world systems are resisting our disruption. It's an unfalsifiable narrative.
It's the ultimate get-out-of-jail-free card. If you fail, it's because the world wasn't ready for your brilliance. If you succeed, you're a god. But how does that work in practice for the actual investor? Like, if I'm a high-net-worth individual and I put $10 million into a ocean plastic circularity fund, am I really getting the same psychological hit as someone joining a commune?
In many ways, yes, but with better catering. You're invited to the private retreats in Necker Island or the Swiss Alps. You're surrounded by people who all agree that you are the most important people on the planet. You're given a new vocabulary. You start seeing the world through the lens of leverage points and systems change. It's a totalizing worldview. And once you've spent 5 years telling your friends at the club that you're healing the oceans, You can't exactly turn around and admit you just fell for a high-fee marketing scheme. The ego won't allow it.
The structural critique here is that this veneer of respectability allows the wealthy to maintain their status while appearing to be the ones dismantling the systems that benefit them. It is what Anand Giridharadas calls the elite charade. The core belief is that social innovation is the only path forward, which conveniently bypasses things like taxes, regulation, or democratic oversight.
Why wait for a slow, inefficient government to pass a carbon tax when you can join an exclusive climate alpha group that promises to fix the atmosphere through a proprietary AI-driven carbon credit marketplace? It's the privatization of social progress. You're moving the levers of power from the voting booth to the family office.
It is the ultimate win-win, right? That is the phrase they love. You get rich, the world gets better, and nobody has to lose anything. But in the real world, usually, for someone to win that much, someone else is taking a hit. Let's dive into the first mechanism Hannah pointed out, the language of purity. I have been looking at some of these 2025 and 2026 prospectuses, and the jargon is incredible. Everything is regenerative, holistic, or circular.
Those are shibboleths, corn. In linguistics, a shibboleth is a word or custom that allows an in-group to identify its members and exclude outsiders. If you walk into a room and start talking about regenerative finance or systems-level change, you are signaling that you belong to the tribe. It creates a barrier to entry for anyone who wants to ask a basic financial question, like, what is the actual liquidity of this asset?
I saw a pitch deck last week, and I won't name names, but it used the word synergistic 14 times in 3 pages. It talked about unlocking the human potential of the global south through decentralized impact nodes. I mean, what does that even mean? If I ask about the exit strategy, and someone responds with a 10-minute lecture on the holistic ecosystem of stakeholders, they aren't answering my question. They're performing a ritual. It is designed to make the skeptic feel small or unevolved. Like, oh, you are still worried about internal rates of return? How quaint. We are busy birthing a new paradigm here.
It's a classic cult tactic, loading the language. Robert J. Lifton, who studied thought reform, talked about thought-terminating clichés. These are phrases designed to stop critical thinking in its tracks. In impact investing, phrases like the triple bottom line or conscious capitalism act as those clichés. They sound so inherently good that questioning them makes you look like a villain. If you ask, wait, is this fund actually just a way to avoid capital gains tax? The response is, we're focused on the consciousness of the capital. How do you even respond to that? You've been out-virtued.
It's like trying to punch a cloud. There's nothing to grab onto. But Herman, doesn't this language actually serve a purpose? I mean, if we are going to change the world, don't we need a new way to talk about it? Or is it purely about exclusion?
It's about the function of the language. If the language clarifies a complex reality, it's useful. But if the language obscures a simple reality, like this investment is losing money, then it's a control mechanism. In these impact circles, the language is almost always used to obscure. It creates a sacred space where the mundane rules of accounting don't apply. It effectively silences dissent. In cult dynamics, this is called thought reform. By using terms that feel morally superior, you make it psychologically difficult for someone to offer a technical critique. If you criticize a regenerative agriculture fund, are you against the earth? Do you want the soil to die? It creates this false binary where you are either with the mission or you are an extractive dinosaur.
Which leads right into the second mechanism, isolation from outsiders. I have noticed that these impact circles are incredibly insular. You see it at Davos or the big family office summits. They don't want traditional finance guys coming in with their spreadsheets and asking about due diligence. They view traditional finance as extractive, which is a great way to avoid an audit.
It is a defensive perimeter. By framing traditional due diligence as part of the problem, they prevent cognitive dissonance. If the fund managers can convince the investors that outsiders just don't get the mission, the investors will ignore the red flags. We saw a perfect example of this in the 2024 Regenerative Agriculture Fund collapse. The fund manager was using all the right vocabulary, talking about carbon sequestration and indigenous knowledge, and the investors waived standard due diligence because they were so caught up in the emotional payoff of the story.
Wait, I remember that one. Wasn't there a whistleblower who tried to point out that the indigenous knowledge was actually just a Google search, and the carbon sequestration was literally just a field of weeds?
But when that whistleblower spoke up, the fund leadership didn't address the facts. They attacked the whistleblower's vibrational alignment. They said he was trapped in an old paradigm mindset and was hostile to the mission. That is textbook cult behavior, isolating the group from suppressive persons or merchants of chaos. If you can convince the group that the critic is morally deficient, you never have to answer the criticism.
It's a brilliant way to handle a PR crisis. You don't hire a lawyer, you hire a spiritual consultant to cleanse the energy of the boardroom. But let's talk about the love bombing. That is a classic cold move. When you join, you are showered with affection and told you are part of something world-changing. In this world, the love bombing is the immediate emotional high of feeling like a hero. It overrides critical analysis. You want the story to be true so badly that you stop looking at the numbers.
The love bombing in impact investing usually happens at the impact summits. Imagine a 5-star resort in Bali. You arrive, and everyone, from the organizers to the other investors, is telling you that you are the vanguard of the new economy. You're given gifts that are ethically sourced and handcrafted by empowered artisans. You're invited to meditation sessions for global abundance. By the time you sit down to look at the term sheet, your brain is flooded with dopamine and oxytocin. You're not an investor anymore, you're a member of the family.
And the trade-off is often transparency and actual impact. Because the metric for success is often self-reported or based on vague ESG scores, there is no real way to verify if the world is actually getting better. But the investor feels better immediately. That is the product being sold, the feeling of virtue.
It's a virtue commodity, and like any commodity, its price is driven by demand. The demand for not feeling like a billionaire who is destroying the planet is at an all-time high. So, the price of these impact products remains high, regardless of their actual performance.
It is a high price feeling too. Let's talk about the money, because that is where the donkey really kicks. I saw some data from the first quarter of 2026 showing that these impact funds are charging, on average, 1.5% higher management fees than traditional private equity. 1.5%. That is a massive premium for a label.
It is justified by the complexity. That is the pitch. We have to measure social outcomes, which is harder than measuring dollars, so pay us more. But how do they measure it? Most of the time, they use proprietary impact frameworks. It's a black box. You're paying a premium for a measurement tool that you aren't allowed to see, which is operated by the people who have a financial interest in the results being positive.
It's like a student grading their own homework and charging the teacher for the privilege of watching them do it. But Herman, isn't there a risk here for the fund managers? If they overpromise and underdeliver, doesn't the market eventually correct itself?
You'd think so, but the cult structure protects them. In a normal fund, if you lose 20% of the capital, people sue you. In an impact fund, if you lose 20% of the capital, you tell a story about the high cost of systemic disruption. You say, we are investing in the long-term health of the planet, and that requires a different kind of patience. You turn a financial loss into a moral sacrifice. The investors feel noble for losing money. That is the ultimate magic trick. Often, that extra fee just goes into the pockets of the fund managers, who are the high priests of this particular cult. They are the ones traveling on private jets to talk about carbon footprints.
I've seen those private jet manifests. It's the height of irony. A fleet of Gulfstreams descending on a coastal resort to discuss rising sea levels. It is the ultimate grift. You convince the wealthy that they can buy their way out of guilt, charge them a premium for the privilege, and then use that money to entrench your own position as a thought leader. And since the investors are all talking to each other in this echo chamber, nobody wants to be the first one to say the emperor has no clothes.
That is the virtue feedback loop. This is essentially social proof on steroids. As more high net worth individuals join, the social cost of questioning the fund increases. If all your friends at the country club are in this impact fund, and you start asking why the returns are lagging or where the impact reports are, you are the one who looks like the jerk. You are the one who isn't mission aligned. You risk being cast out of the social circle that defined your status.
It creates these impact ghettos. You have got all this capital locked up in assets that are socially acceptable, but financially illiquid and totally opaque. It is like the Theranos of the philanthropic world. Everyone believed the mission so much that they stopped checking if the machine actually worked.
The comparison to Theranos is actually very apt. Elizabeth Holmes didn't just sell a blood test, she sold a vision of a better world where no one had to be afraid of needles or late diagnoses. She used the language of disruption and empowerment to bypass the skepticism of people who should have known better. She even had a board of directors that looked like a who's who of the global elite: George Shultz, Henry Kissinger. These were people who lent her their credibility, which she then used to fleece other investors. Impact investing does the same thing on a global scale. It uses the moral urgency of climate change, or inequality, to justify bypassing the democratic and financial checks that usually govern large-scale change.
But how does this play out in the long run? If we keep funneling trillions into these black box impact funds, what happens to the actual problems? If the money isn't reaching the people who need it, but the elite feel like they've already solved it, do we just stop trying to find real solutions?
That's the most dangerous part. It's called moral licensing. When you do something you perceive as good, like investing in an impact fund, you subconsciously give yourself permission to do something bad or to stop caring about the systemic issue. You've checked the box. This leads to a massive consolidation of wealth and power under the guise of benevolence. If you can turn social problems into investable opportunities, you are basically colonizing the public square. You are taking things like education, water rights, and healthcare, things that used to be managed by the public for the public, and turning them into private assets managed by the elite.
It's the Uberization of the social safety net. Instead of a guaranteed public service, you get a disruptive impact startup that provides the service only as long as it's profitable or mission aligned. And if they decide to pivot, too bad for the community that relied on them.
It is philanthrocapitalism. It sounds nice, but it effectively removes these issues from the realm of democratic debate. Instead of voting on how to handle water scarcity, we wait for a billionaire-backed impact fund to decide which technology is most profitable to deploy. The wealthy gain control over the essential infrastructure of society while being cheered for their generosity. They aren't just the winners of the economy, they are now the owners of the solutions.
It is a brilliant move, honestly. You preserve your assets in tax-advantaged vehicles, like donor-advised funds. You keep control over where the money goes, and you get a standing ovation for it. Meanwhile, the actual systemic causes of these problems stay exactly where they are, because fixing them would mean the wealthy might actually have to lose some power. If you really wanted to solve poverty, you'd advocate for higher corporate taxes and stronger unions. But there's no impact fee in that.
That is the win-lose scenario that is forbidden in the impact cult. You can't talk about the fact that for true wealth equity to exist, some people have to have less wealth. The impact world insists that we can just grow the pie until everyone is happy, ignoring the fact that the pie is currently sitting on a burning stove that the wealthy are still fueling. The ideology of the win-win is the central dogma of the cult. It's what keeps the members from seeing the inherent contradictions of their position.
So, how do we break the spell? If you're an investor or just someone watching this from the outside, how do you spot the cult tactics before you get sucked in? I think we need some actionable takeaways here because this stuff is everywhere now. I'm seeing impact-conscious laundry detergent and regenerative crypto wallets. It's getting ridiculous.
The first one is what I call the vocabulary test. If the pitch for a fund or a project relies more on moral adjectives than quantitative metrics, that is a massive red flag. If they are using words like regenerative, holistic, and conscious every third sentence but can't explain the underlying business model without using those words, walk away. A real business should be able to explain how it makes money using the same language a plumber or a baker would use.
Right. If you can't describe what you do without sounding like a yoga instructor, you probably aren't running a solid investment firm. My favorite is the liquidity check. Ask them, if I wanted to exit this investment tomorrow, what is the mechanism? If the answer involves the phrase mission alignment or finding the right values-based buyer, you are in a trap. That is just code for there is no market for this, and you are stuck here until we decide to let you out. In a cult, leaving is always the hardest part. The same is true for these opaque funds.
Another one is demanding third-party impact audits. And I don't mean a report from a consultant the fund hired. We don't let companies self-report their earnings. We have the Big Four accounting firms go in and verify the numbers. We should do the same for social claims. If a fund says they saved 1,000 acres of forest, I want to see a satellite map and a report from an independent biologist, not a glossy brochure with a picture of a tree. If they resist an independent audit, it's because the impact is purely fictional.
We also need to look at the exit cost, socially speaking. This is a big one for the high net worth crowd. Ask yourself, if I pulled my money out of this fund today and told everyone I thought it was a scam, what would happen to my social life? If the answer is, I'd be blacklisted from the next big summit. You are in a high control group. True philanthropy and true investing should be able to stand up to the harshest sunlight. If it needs the darkness of an exclusive summit to survive, it is not helping anyone but the people in the room.
I think we also have to be honest about the sacrifice paradox. Cults usually demand a lot from their members: time, money, family connections. In the impact cult, the members actually sacrifice very little. They seek market rate returns. They keep their status. They keep their private jets. The sacrifice is shifted onto the public, who loses their right to have a say in how their society is run. Whenever you hear about a win-win, ask yourself, who is the silent loser? Who is the person who wasn't invited to the summit, but whose life is being disrupted by this investment?
It is usually the people who were supposed to be the beneficiaries. They become data points in the slide deck rather than citizens with agency. It is a very sophisticated form of paternalism masked as innovation. It's the white savior, complex updated for the digital age, where the savior now has a venture capital fund and a TikTok following.
And as we head deeper into 2026, with regulators starting to actually look at ESG claims, I expect these cult-like structures to become even more insular. They will double down on the secret language and the exclusive gatherings to protect themselves from the scrutiny of the SEC or other governing bodies. They'll frame the regulation as a war on progress or an attack on conscious capital.
The SEC just doesn't understand the vibration of our assets, Herman. I can hear it now. It's going to get weirder before it gets better. But man, Hannah really hit the nail on the head with this one. It is a psychological game as much as a financial one. It's about the stories we tell ourselves to justify our place in the world. If you're at the top of the heap, you want to believe you're there because you're a force for good, not just because you're good at compound interest.
The impact cult provides that story. It's a very comfortable, very expensive story. But as we've seen with every high control group in history, eventually the reality outside the bubble becomes too loud to ignore. Thanks for the prompt, Hannah. It definitely gave us a lot to chew on.
It's a vital conversation. We have to decouple the genuine desire to do good from this ego-driven need for moral validation. You can help people without needing to be called a disruptor or a visionary. Sometimes the best impact is just paying your taxes, following the law, and letting the community decide what it needs without you trying to optimize it for a 20% return.
But where is the TED Talk in that, Corn? Nobody wants to watch a guy talk about fair tax brackets and the importance of municipal oversight for 18 minutes. They want the vertical farm in the desert. They want the blockchain-based solution for ocean plastic. They want the magic.
Sadly, you are right. People love a good show, especially when they are the stars of it. But maybe the vertical farm is just a mirage. And maybe the real impact is realizing that we don't need billionaires to save us. We just need them to stop standing on our oxygen hose. Anyway, that is probably a good place to wrap this one up. Big thanks to our producer, Hilbert Flumingtop, for keeping the gears turning behind the scenes and making sure our vibrations stay high quality.
And a huge thank you to Modal for providing the GPU credits that power the generation of this show. We literally couldn't do this without you guys. You are the real-world infrastructure that makes this digital nonsense possible.
This has been My Weird Prompts. If you are finding these deep dives useful, or if you just like hearing a sloth and a donkey talk about the global elite and the psychological traps of modern finance, please leave us a review on your podcast app. It really does help other people find the show and join our, well, I was going to say tribe, but given the topic, let's just say audience.
Good call. No tribes today, just listeners. Catch us next time for more deep dives into the prompts that keep us up at night. Stay skeptical, everyone. Don't buy the win-win until you see the math.
and the audit. Don't forget the audit.
See ya.
Bye. This episode was produced using Google Gemini 3 Flash, text-to-speech by Chatterbox.
Thanks for listening to our show, my weird prompts, where our thoughts go from slow takes to facts on cue. We change and follow through. My weird prompts, that's the flows from slow